Evening Doji Star. Now, evening Doji Star is considered to be a reversal pattern. This pattern consists of three candlesticks. First is a large green body candlestick, followed by a doji that opens with a gap above the green body. So basically, the doji doesn't tell you its intentions. It tells you that it looks bullish, everything is opening higher, highs are higher. But the last candlestick is a red body that closes well into the white body. So once it does that, that's where the problem starts. So this is a pattern to keep your eyes on. Once it happens, then it means reversal is coming. When it appears right on top, then it is considered as a lethal pattern. As evening doji star signals more bearish trend than the evening star pattern, and that is due to the doji candle, because doji candle is considered to be a bomb. And once you see the black candle on the doji evening doji star, then it like explodes, and once it explodes, the bulls are gone out. They are like killed, and bears are in the position of like conquering the stock or Forex or whichever chart it is. As doji is considered to be a devil's candle, so it like really creates a mayhem. Now I will show you the evening doji star on chart so that you can understand how to pick it yourself. Evening doji star. Now this pattern is something that occurs in what I call months on months. It occurs once. It's something that doesn't come up like again and again, but it is exceptionally powerful. It works and it makes good money. Easy money and quick money, what I call. And an example is something that is, I know, confusing, but it is like this. Example right here. It opened at 52.93 and closed at 53.21. Normal candle, no extraordinary thing. But the next day it opens up. Now it doesn't need to be so much up as it did right here, but it should be up above the body of this candle. This candle is like exceptionally high, but it could be anything, either this one, either this one. So it opens higher at 53.98 and closes at the same place, 54.02, making it a doji candle. But then the next day, either it opens lower, exceptionally lower as it did right here, or a bit lower, and it closes with a dark red candle within the body of this green candle. Now whenever it does this is a sign of a reversal. You should be vigilant, as after that you can see for 2 days it went lower, and even for the next week it went lower, and for next 10 days it went straight. So basically, due to this pattern, it destroyed the uptrend. The uptrend was halted only due to this pattern, and that's the reason this pattern is so powerful, because it stops the pattern, it stops the uptrend, and usually it is followed by a fall of this candle, but it's not necessary. What is necessary is it stops the uptrend, and once the uptrend is stopped, so you can't make huge sums of money, and you have to like either sit on the sideline or search for any new stock to go into, because this pattern is really powerful. And this doji candle makes it even more lethal than other patterns, because gap opening up and then the other day falling off the cliff is something extraordinary, because everyone who was buying, once it gaps open up, more and more retail investors will just jump into it, because they will be like listening to rumors, and usually a gap open up consists of a rumor that is extraordinary. And people due to that extraordinary rumor jumps into buy more than they could afford. And then they are trapped right here. And they have to sit in it for many days. And usually retail investors are not that fortunate to sit in it, so they sell on the fall and they book huge losses. And that's the reason, look out for this pattern. Thank you.